escrows, taxes, and increased mortgage payments. That's what we're going to cover today. So this tax bill is for York County. This is actually mine. I just got it in the mail today. But I want to hit on three main things that always come up this time of year. The first is oftentimes when you are a new homeowner, you freak out when you get a copy of your tax bill because you're thinking that the mortgage company is supposed to be paying it. And 9 times out of 10, they are. But the county that you live in is still required to send you a tax bill so that you are aware of what is owed. But if you have an escrow account, which is that fancy account that's holding a portion of your mortgage payments, so that when your taxes are due and your homeowner's insurance are due, those get paid. If you have one of those, and 9 times out of 10 you do, then you're not paying this out of pocket. It's already being budgeted for you. That brings me to my next point. So we've talked tax bills. It's here, it's out. Oh, let me go back. I want you to make sure if you're in York County or in South Carolina that you see a 4% right there. That's a good thing. That means you're paying your primary resident taxes. If that number is 6, I want you to call me, okay? Escrow accounts. Every year around November, your servicer is going to do an escrow analysis. Simply put, what that means is they're going to send you a statement that shows all of the debits, all of the credits that have gone into your account to make sure that your account is reconciled. By law, they can only keep a 2-month cushion in that account, but they also, by law, have to collect enough so that year over year, when your taxes and insurance come due, they have enough money in there to pay those bills for you. Now, every once in a while, your taxes and your insurance go up, but when the servicer gets those bills, they have to pay them, regardless of what the number is, whether that number is right or wrong. So oftentimes, I'm not going to say often, I'm going to say about 25% of the time, your account's going to go in the negative because increased tax bills, increased homeowners insurance. Both of those for me personally went up this year, and I'm hearing that from a lot of people too. So when that happens, your servicer is going to pay the tax bill, they're going to pay the homeowners insurance bill. And then there's not going to be any money left over, and even sometimes you'll owe the servicer money. But one of the jobs of that servicer is to collect and pull money out of your mortgage payment to make sure there's enough money in there. But when your taxes and insurance goes up, we have to pull the money from somewhere. So that's when your mortgage payment goes up. So you're going to get a letter that looks and tells you, hey, here's an analysis of your escrow account, but we've got a problem. Your account's in the negative. We need to fix that. Totally normal. It's not our fun to hear, but it is totally normal. I think this has happened to me every year for the last several years. But you'll have 2 options. One is you can write a check for the difference to get that escrow account back in the positive. Or 2, they'll allow you to take that amount of shortage, underage, and split it across the next 12 payments. This option, although easier because you're not writing a check, is going to make your mortgage payment go up the most for the next 12 months. So if you have questions when you get your escrow analysis statement, I'm happy to look over it for you. The person to really answer the questions is your servicer, but I look at these a lot, so I'm always happy to help answer those questions for you. If you think of anything else, reach out. Have a blessed day.